Well, AMC stock is up almost 5% at the time of recording this video. A beautiful day for AMC. Although the markets have been pretty volatile, the index is doing well, but some of your small and even mid-cap stocks not doing so well. One of my favorite stocks I have been buying over really the past 6 months or so has been Fubo. Still seeing some massive gains in that stock, but that stock's down almost 17% today on zero news. So it's a pretty rough day out there in the markets. Apple is down over 2%. There's a very weird dynamic happening here, and it looks like money is flowing into AMC here on the day at least. So we're going to get into everything that you need to know, because tomorrow is going to be a big day for AMC. So I want to give you a run through of the data, talk about what happened in the markets today, as well as look at this article from The Street. It says AMC stock a buy ahead of Q2 earnings. AMC's second quarter earnings are just around the corner. Buoyed by box office hits over the last few months, will shares of the movie theater chain soar? They have an interesting take. Let's go ahead and get into all of this information. If you guys want to come trade with us live in real time, linked down below in the description of this video. Thank you for watching, most importantly, and let's get into it. So first and foremost, guys, let's give you a brief run through of the data and kind of what happened today. So if we take a look at the option activity, strange. 38 orders totaling $25.85 million with a positive order value of 2%. The bullishness is so strong today in AMC, even though you're seeing so many bearish options coming onto the option chain, you're still not able to see a fall. And this is probably frustrating to hedge funds and institutions that are making these trades. They're like, we just put $26 million into these bearish options and AMC stock is going up. What in the hell is going on? Well, long story short, AMC reports earnings tomorrow. You're expecting a loss per share of about 4 cents. If AMC does come in with a positive EPS, let me tell you guys, the stock will go crazy. That's the honest truth to it. So I think there is some merit here, like, hey, maybe it's worth it to buy some calls. It looks a little interesting this time around, and that's something I want to talk about as well. Now, let's go ahead and get into these numbers. So the short score is 93. You have $766.16 million worth of short positions currently in AMC stock, which is up about 2.5% within the last 3 months. Estimated short interest of free float sitting at 30.1%. That is up 22% over the last 3 months. Free flow out on loan 37.47%. That is up 21% in the last 3 months. Shares out on loan 193.5 million. That is up about 20.5% within the last 3 months. Days to cover is at 8.2. That is up 78% within the last 3 months. Cost of borrow fees trailing 3-month average at 249.88%, and utilization sitting at 81.57%. So you are getting some very squeezable, very good data over here. That's not something you should be concerned with. Like, is the data looking squeezy today? Don't even think about that. Every single day, you look more squeezable than the prior day. Because why? Well, none of the data moves around substantially on any given day unless we get a new official report for the short interest that comes out. But the cost of borrow fees have been a major problem. These arbitrage traders, they were like, hey, if we have to pay 500, 1,000% cost of borrow fees, that's fine because we're only going to pay them for a month or two, and then this split's going to go through and then we can cover on our short positions. Well, in fact, it's taken a lot longer than that, and right now it's taken over 3 months. And it, to be quite honest, looks like it could take a while longer. So these cost of borrow fees, even though they have dropped, being at 220%, when you average that out, these hedge funds and institutions are basically guaranteed losing money at this point. A vast majority of them will not be able to be profitable on this trade, even if the arbitrage trade happened tomorrow. So keep that in mind. Every single day is quite important when it comes down to the cost of borrow fees and eating away at those profits. Now, cost of borrow average on the day, 352.5%. Cost of borrow max, 380%. Cost of borrow minimum, negative 1.2%. 30.14% short interest of free float. and 155.64 million shares that are currently sold short. Looks like about 225,000 shares have been sold short today as well. So it looks like a lot of the same activity that got the hedge funds to where they are today is happening again. Now, the FTD situation, we talked about this in the last video. I'll briefly cover it here in this video. You could point to this as maybe a reason AMC has done so well today. Total FTDs that come due today are 12.5 million. Now, you don't have any FTDs tomorrow, which I find interesting because tomorrow during the regular trading day, we're not going to get AMC earnings. But in after hours, we'll get AMC earnings. So the next day, which is going to be August 9th, is when AMC will actually react to its earnings, and you'll get that follow-through effect based on the gap up move or gap down move tomorrow in after hours. And that's when you have the highest amount of FTDs that come due, which is 14.6 million. So FTDs jump about 2.1 million from today until Wednesday. So that's the actual gain of FTDs over the next 2 days or so. And that could be quite interesting, just depending on if some, do ultimately cover on their FTDs or not. So there you have that. Now let's go ahead and take a look at the Stock Tracker data, okay? So if we pull this Stock Tracker data up, the thing I've been saying is you're essentially seeing a lot of put activity, which a lot is kind of relative because it's not a lot compared to other option expirations, but it's a lot compared to this week. And when you look at the calls, on the call side, you're seeing about 160,000 total calls. On the put side, you're seeing about 300,000 total puts. If you do see 50, 100,000 contracts come on to either the calls or the puts, that could have a big impact. And I think a lot of that will depend on what happens with AMC's earnings. So do keep all of this in mind. As far as what's happening in the markets today, it's simply just a bounce from the kind of sell-offs that we have seen recently. I don't think you get anything too important until tomorrow morning. That's when you're going to get UPS earnings. If they are really good or really bad, that could be a sign of the consumer. That could be something the markets do pay attention to, as well as on Thursday, you're going to get the CPI report. And we've covered that pretty extensively. Nothing's expected to move besides that year-over-year headline number. If this comes in at 3.5% or higher, markets are probably going to fall 1.5% to 2%. If this number comes in at 3.1% or lower, well, that would be your best case scenario, and markets would rip higher, probably a 2.5% up move if that were to happen, would show some of those base effects from last year, still not changing the year-over-year numbers, which would be very, very positive. So those are some of the things that are currently going on and what have affected the markets today. Again, I really don't think today matters in the grand scope of things. If you were bullish on Friday, I would still be bullish today. If you were bearish on Friday, I would still be bearish today because nothing substantial has actually happened. Now, this article from the street says AMC stock a buy ahead of Q2 earnings and asks the question, will shares of the movie theater chain soar? Says analysts expect that AMC will report substantial increases in both EPS and revenue growth for Q2 as well as the upcoming quarters, thanks to promising theatrical releases and a post-pandemic box office performance rebound. Now, also could be important to point out, Barbie crossed over $1 billion at the box office. That's very good, but that's going to be for Q3. So we want to see what Adam Aron and the board says about commentary, right, about next quarter. That guidance will also be very important. Now, AMC share price has been volatile due to the ongoing drama surrounding the conversion of preferred shares, APE shares, and positive Q2 results and high short interest. However, could work to drive AMC's price upward in the near term. And it says AMC's Q1 earnings preview. For its previous quarter, AMC had solid financial results that mostly surpassed Wall Street's consensus. After releasing their Q1 results on May 5th, AMC shares rose about 4% in pre-market trading. The movie theater chain reported an adjusted loss per share of 15 cents, about 3 cents below consensus. Revenues came in at $954.4 million, which was $16 16.2 million higher than analysts had estimated and represented a 21.5% year-over-year improvement. AMC's management specifically highlighted its revenue increase in food and beverage, which rose 30% year-over-year, and in the first quarter, EBITDA increased by $69 million to $7 million. In the previous year's Q1, AMC saw an EBITDA loss of $62 million. So some really good financial performance you've seen with AMC so far. Now, the 2023 first quarter's box office receipts reached 72% of their Q1 2019 values, and while that meant moviegoing still hadn't retaken its pre-COVID levels, that number represented a significant improvement over Q1 of 2022, when receipts were only at half of their Q1 2019 levels. It does say across the board revenue increases were thanks to, in large part, the number of movies released in the quarter. In Q1 2023, Hollywood released 35 films that grossed over $5 million domestically. That represented a 34% year-over-year increase. That was the best quarter box office since the beginning of the COVID pandemic in March of 2020. And then it goes on to say, one of the reasons Q1 earnings left a positive impression on the market was the promising forward guidance by AMC's management. The company said it expected a substantial increase in revenue due to the many exciting theatrical releases this year. In fact, AMC expects domestic box office revenue to reach $9 billion or higher by 2023, and it expects its EBITDA to be in the hundreds of millions for 2023, much higher than the $46 million gain for 2022. AMC will report its second quarter results on August 8th after the bell. The consensus among analysts is for the company to report an 80% year-over-year improvement in loss per share numbers, with an expected loss of 4 cents per share. Revenues are expected to top $1.27 billion, representing nearly 10% year-over-year growth. And should AMC hit those numbers, the company will be only 20% below its Q2 2019 pre-pandemic revenues. Based on that solid box office in Q2, there's good reason to believe AMC should once again beat Wall Street consensus. It says the first quarter box office came in strong, with Super Mario Bros. Grossing $574 million alone. Guardians of the Galaxy and Spider-Man Across the Spider-Verse were also heavy hitters, grossing $358 million and $379 million, respectively. The second quarter generated a cumulative gross of $2.83 billion, surpassing Q2 2022 gross by 10%. Particularly impressive given that the quarter saw the release of Top Gun Maverick, which that's pretty interesting. However, although box office returns are growing, AMC is not out of the woods yet financially and may not be anytime soon. The company's revenues are not expected to reach pre-pandemic levels until 2025. I think that could be part of the story why AMC could rally, because even if we come in at the expectations, that's 20% lower than pre-pandemic box office numbers. If you come in higher than expectations, which it's likely AMC will, that could be 10% off of 2019 pre-pandemic levels. And I mean, if we're not expecting that for another, 16, 17, 18 months from now, well, maybe it comes a little bit sooner than people were expecting. So that's important to point out. Now, there's a lot left of this article. I know we've been reading it for quite a while. It goes on to talk about, should you buy AMC? Now, let me just summarize this. They say the financials have been getting better, but you're really at the mercy of this court proceeding, and that apes trade at a spread of about $2 that traders have been betting on for the price convergence, which would occur if a total conversion of preferred shares to common shares actually goes through by shorting AMC and going long in apes. So it's pretty straightforward. It really depends on that. Now, it says, it says the ruling was good news for AMC shareholders, the previous ruling that sent up AMC stock. However, investors had far less reason to believe that AMC and APE shares would converge, which removed much of the downward pressure on AMC shares. Dilution risk for AMC shareholders were also significantly lessened. Given all of this, I see AMC as an exciting trading opportunity ahead of its earnings. The litigation process may still be the primary driver for the stock in the near term, but should AMC manage to report results that soundly beat Q2 expectations, upward buying pressure coupled with high short interest and stratospheric borrow fees could help drive AMC's share price to eye-popping levels in the near term. So pretty bullish take on AMC, and there's a lot of information here. If you guys want to go read this for a second time, highly recommend you guys do. Just type in Google AMC stock, a buy ahead of Q2 earnings, or check down below in the description of this video next to the link for the trading community, and click on that link and go ahead and bring yourself to this article. So I agree with him, right? The courts are obviously going to take the most precedent in the near term. Whatever is decided, that's going to affect the stock most. But just based off the charts here, I mean, this is a very bullish setup heading into AMC's earnings. And a day where, for an example, Fubo's down almost 17% with no news, and AMC is up 5% again with no news. It's obviously a massive winner and massive outperformer today. Maybe someone knows AMC's earnings are going to be positive. That's always a possibility. Earnings do get leaked quite often where, you know, some big hedge funds, institutions, or just people get tipped off on what the numbers are going to be, and based on that you can kind of get a feel for how the stock trades before earnings. A lot of the time, if the stock sells off into earnings, it has bad earnings. A lot of the time, if the stock rallies into earnings, it tends to have pretty good earnings. So based on this chart, it's looking exciting. Check out the price prediction video we put out on Sunday if you guys want to know exactly what could happen with AMC stock. But long story short, if you do see positive EPS, or maybe slightly negative, maybe -1 cent or -2 cents, the stock could easily break past that 550 level, ultimately break into that $6 range just off of that alone, because the better the business does fundamentally, the less capital they will need to raise and the less dilution that you will see. Thus, the probability of this reverse split going through is also lower as well. So some pretty big implications. Hopefully you guys learned something out of this video. If you did, hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to get yourself some free money, check out the link down below in the description of this video as well for Webull. Sign up, deposit a single $1, and get yourself, I believe it's 12 free stocks right now. And they're giving out some pretty good stocks over there. So definitely go ahead, check it out for yourselves if you have not done so already. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.